For the first 11 months of my trading journey, I was in the red. That means I was losing money every single month. And in the following 8 months, I was able to grow my small $3,000 account into $100,000 plus. So in this video, I'm going to share my 5 steps to growing a small trading account. Let's dive in. The first step to growing a small account is to focus on learning, focus on yourself, and remove all the noise. Because 10 years ago or 15 years ago, social media was not that popular and day trading was not that popular on social media. But these days, even if you are making $1,000 or $10,000 every single day on an average, there is always someone doing better than you. I'm going to share my personal experience with you guys. With the $3,000 account, then eventually I grew that account to $5,000, then $10,000. Making $100, $200 or $500 used to make me feel like awesome. I used to get that sense of achievement when I used to make $500 on an average on a daily basis. But these days, even though I'm surpassing that amount, I'm making $1,000 to $5,000 on an average every single day, it's very difficult to get that sense of achievement. Honestly, because of social media. Because of social media, the bar is set so high. So if you're making anything less than $10,000 or $100,000 from day trading, you practically feel like when I was making $100 a day, I saw traders on social media making $1,000 a day. So I was like, this is possible. I'm going to double down on my rules. I'm going to be a disciplined trader and I'm going to start making $1,000 a day. Eventually, after a few months of focusing on all these things, discipline and patience and focusing on my rules, I started making $1,000 a day. After I started making $1,000 a day, you guys know what happened. I saw traders posting about $10,000 a day. So I was like, this is also possible. I need to start making $10,000 a day. So take it from my personal experience. If you have a monetary goal, you are bound to lose in this career because the goalpost keeps on changing. So your goal in trading should be about trading well, about executing. And in 2023, I started focusing on percentages. We are going to talk more about percentages in one of the upcoming points, but focusing on the percentages has been a game changer for my own trading. So in short, with small account, your goals in trading should be based on the process and not the outcome. Money is the outcome, but you focus on the process, you will be able to scale it exponentially. For example, on one day, if you oversized on a trade, the goal for the following day should be to manage your risk and focus on taking good entries and exits without caring about the P&L. The second step to growing your small trading account is to always focus on these two words, which are patience and discipline. You guys can see the wallpaper on my laptop. It's patience and discipline. I have the same thing on my phone as well. Patience and discipline. Long term, not short term. The one thing. My mantra was and is patience and discipline when it comes to trading. These two words are very important, especially if you trade leveraged products like Forex and options. With Forex, you have insane margin, and with options are already very leveraged products. So that's why it's very easy to size up and blow up your accounts when you are trading Forex and options. And that will again bring us back to social media, because you will see a lot of Forex traders, a lot of options traders, they are flipping their accounts from like $10,000 to $100,000, $25,000 to $250,000, $100,000 to $500,000. But you have to keep in mind that they are flipping accounts. So that means they can also lose that account as well. So if they are making $100,000 with a $25,000 account, you need to understand that their risk is approximately $15,000 to $20,000. It's not possible for you to make $100,000 by risking $1,000. Yes, you can maybe risk $10,000 and score a really good trade with 10R risk to reward. That means if you're risking $10,000, you can make $100,000, but you need to start thinking in terms of risk and reward. The one question you need to ask yourself is that, are you in the business of flipping accounts, or you want to focus on slow growth and consistency over time? I know the answer. For my own trading, I need to focus on slow growth and consistency over time. But for you, if the answer is flipping accounts, then this video is not for you. For me, I prefer consistency. I think 2 to 5 years down the line, and I need to focus on the habits that are scalable. Flipping accounts is not scalable, and it's not even good for your mental health. For example, if you're risking $25,000, your whole account to make $100,000 plus, can you do the same thing with $1 million account? If the answer is no, then you should not practice these habits with a small account. And that is why with a small account, if you have a $3,000 account, $5,000 account, or $10,000 account, your main focus should be to develop good habits, the habits that will help you manage a big account as well. Because eventually, when you grow that $3,000 account into $100,000, into $500,000, into $1 million, if you have good habits, you will know how to manage that account. But on the other hand, if you are flipping accounts, and if I give you a $500,000 account, you will try doing the same thing with that account, and you know how it's going to end. For me, at this stage of my trading journey, I risk anywhere between 2 to 5% of my trading account in order to make 5 to 10% or maybe even 20% of my trading account. Especially with options, if you catch a really good trade, you can sometimes make 20 or 30% on that trade. The market can surprise you sometimes. And I focus on that because I know it's scalable. I can do the same thing with a $500,000 account. I can do the same thing with a $1 million account. I can do the same thing with a $10 million account, maybe risking 1%, not 5%, but I know it's scalable. But flipping your accounts, it's not scalable. So you need to have a clear direction. You need to know where you are heading, because one day if you focus on flipping accounts, the next day you're focusing on risk, the third day you are flipping account, the fourth day you are focusing on risk, it won't take you anywhere. So you need to have a clear goal and work towards it. The third step to growing a small trading account is to focus on risk before reward. I know, cliche, everyone talks about this, but you need to engrave this sentence, this risk before reward, in your head. Before each and every trade you take, you need to focus on risk before reward. Are you willing to risk $100 in order to see if that trade pays you $200 or $500? Just this thought and this mindset of risk before reward is going to help you avoid so many trading issues like over trading, oversizing, and going from green to red. Because I see so many beginner traders, even if they are up $500 with a $5,000 account, they keep over trading and then they lose everything going from green to red, which is the worst mistake you can do with a small account. And this usually happens because they are focusing on the reward and not the risk. If they are up $500 for the day, they see a really good trade opportunity, nothing wrong with that, but then they are just focusing on the reward. I can make $1,000 on this trade, make it my biggest day yet, but they ignore the risk. But the day you start thinking about risk before reward, you will be like, okay, I'm up $500 for the day. I'm okay ending the day with $400 in the green. So I'm going to risk the extra $100 to potentially make $200 or $500 more dollars. That should be your mindset. Thinking about risk before reward on every single trade you take moving forward. The fourth point to grow a small trading account is to focus on price action and volume and remove all the indicators from your chart. From February 2019 to January 2020, for the first 11 months of my trading journey, I was losing money. I was red every single month, and it can't be a coincidence that my chart was full of indicators for those 11 months. And starting January 2020, I removed all the indicators, and February 2020 was my first green month. Can't be a coincidence. I want you guys to do one thing. Go and give me a follow on Instagram, scroll all the way to the bottom and check out a post from 2019 or early 2020. If you take a look at any of those charts, you will be able to see so many indicators on my chart, a lot of lines, and my journal back then in 2019 was full of indicators. I should have entered at 50 SMA. I should have entered at 9 EMA on the 1 minute chart. And you guys know the trading was not working out for me. I was losing money every single month. So as a beginner trader, and honestly even as an advanced trader, you need to remove all the indicators from your chart and focus on raw price action and volume. There are only a few indicators I use personally for my own trading, and these are based on candlestick patterns, the range of a stock, and volume of a stock. If you guys want to know more about the indicators I use for my own trading, that video will be linked at the top. The fifth step, the most important step to grow a small trading account, is to have a trading journal. The best book you can have as a day trader is your own trading journal. And I can't believe that so many beginner traders, they just refuse to have a trading journal, because in the long run, the journal is the one thing that will help you step it up and take it to the next level. So every trader needs to have a journal, but one important word that you need to keep asking yourself in your journal is why. I see a lot of traders, they just focus on the action and not the underlying emotion. For example, you chase the stock on one day. The next day, just telling yourself to not to chase a stock won't fix the underlying issue. You need to ask yourself, why did you chase that stock? Maybe you had FOMO. Why did you have FOMO? Because you saw a trader making $10,000 on a similar setup on Instagram. And the thing about humans is that we only have FOMO on the things we look at. So what I mean is that if you're a stock trader and you don't know where Bitcoin is, you don't care about cryptocurrencies, and I tell you that Bitcoin moved 10% yesterday, you won't have FOMO on that. Or if I tell you the real estate investment I bought last year has appreciated by 20% in 1 year, you won't have FOMO on it. The thing about FOMO is that we only have FOMO on the things we look at, that is in front of us. For example, if you're a stock trader and you are a mega cap stock trader, maybe for example, Amazon moved 5% yesterday, you will have FOMO on that. But if you don't trade penny stocks move up and down 5% every single day, you won't have FOMO on those stocks. So you need to have a dialogue with yourself that it's okay, you are missing out on opportunities every single second of the day. You're missing out on opportunities in cryptocurrencies, in futures, in forex trading, in real estate. But what you can do as a trader is to capitalize on the opportunity in front of you and execute it really well. So instead of this one-line sentence in your journal that I should not chase a stock, You need to go in depth and find the underlying reason. If you guys want to know more about my trading journal process, you guys can check out the video that will be linked at the top right here and in the description box below. If there was something in this video that you could personally relate with, let me know in the comment section below. And if you guys like this video, give this video a thumbs up and subscribe to my channel for a lot more content on day trading. Go give me a follow on Instagram as well, because I post a lot of behind the scenes and trade recaps of a day trader in Dubai. The link will be in the description box below. Thank you for watching, and I will see you guys in the next video.